founder that has created a product or service or nearly finished creating a product or service and is looking for go-to-market strategies. So today I wanted to go through a checklist that I've created when thinking about the financial considerations with your go-to-market strategy. Ideally, if you have all of these things in place before you go to market, you're in a better place from a finance perspective and therefore cash perspective and understanding of what's working and what's not working when you go to market. So quick intro, my name's Alysha Randall from Fast Growth Consulting, and I run a fractional CFO firm for startups and scale-ups. And we work with founders every day, every week. And so today I really wanted to go through that go-to-market strategy. And if interested, I do have a checklist that you can download, and I will leave that link below so you can check that out. So essentially there are 5 areas that I wanted to go through today on that forms part of that go-to-market financial strategy and checklist. And I will go through all 5 of those in today's video. And again, you can download this checklist so you can go through that in your own time. And you don't need to scribble down any notes. So the first one is business model and pricing validation. So this is when you're trying to understand the unit economics of what you're trying to sell. So whether you're selling a product or a service, you need to understand how much it's going to cost for you to create and deliver this product or service. So if it's a product, which is easier to talk to when you're thinking about unit economics, is how much it costs per unit that you're going to sell. What is your gross margin, which essentially is your revenue or price that you're planning on charging per unit, less the cost per unit is your gross profit. And then that as a percentage of your revenue. And then also your break-even point. So not only is it the cost of per unit to produce, but you also need to consider sales and marketing for that product as well. Setting competitive pricing, so you want to make sure that your pricing strategy covers the costs of producing that product or service as a minimum, but it also aligns with the customer demand. So how much is a customer willing to pay for this particular product or service? And it's making sure that you get the right balance between covering all of your costs and aligning with the market demands, essentially. You also want to test the market demands. So you can run pre-orders, you can have pilot sales, you can potentially create waiting lists, or you can have a limited release. You want to do all these different things before you go to market and throw everything at it, just so that you can validate pricing and demand. Daniel Priestley is quite a well-known entrepreneur here in London. He talks a lot about waiting lists as a way of understanding the demand for your product before you've even started creating the product or service. So this might be a nice way of testing the market demand. And you also want to assess distribution costs. So if you are distributing digitally, it may be quite straightforward. It just might be the cost of website and maybe AWS or whatever you're using, the cloud or what have you. Or it may be, say, Stripe fees or merchant fees, so the cost of taking payment. But if it's a product, it's much more complicated because you then may want to consider shipping, fulfillment, potentially retailer or distribution margins, how much inventory, storage costs, all those different things. The second section within the checklist is the cost and budgeting plan. So you do want to estimate the startup costs. So whether that's product development, packaging, branding, marketing, maybe regulatory approvals. There's lots of things that you do need to consider. I probably need to pull one together actually, but no doubt if you do a quick Google, you will find a list of costs associated with starting a company and creating a product or service. There will be regional specific things that you'll need to take into consideration. Within those costs, you may want to identify which are fixed and which are variable. So by fixed costs, it may be things such as rent, software subscriptions within reason, these kind of things. And so they don't really move month on month. And then there's variable costs depending on your type of product. So if it's a physical product, it may be things like ingredients or manufacturing, again, distribution. If it is a more service, it may be the cost to serve your customers. So whether that is customer services or consulting, like my business, for example. You'll also need to plan for marketing spend. So whether that's digital ads, sampling, partnerships, public relations, all of those things are really expensive. I will say, as a finance person, one thing you also need to be very mindful of, particularly when you go to market, is to work out of all that marketing spend, what is giving you a good return on investment. You can very easily just throw money into marketing and see what sticks. There is an element of that. You do need to test different channels to see what works and what doesn't. But if it doesn't work and you're not getting a return on the investment, you need to change your strategy quickly. So work out what is your bucket of spend and then what you expect your return on investment to be on that marketing spend, and test different things constantly to see where your return is. There are hidden costs, and this is particularly with products. There may be things like import duties. There may be things like tariffs, which is quite a topic at the moment in 2025. There may be supplier minimum order quantities. There may be storage fees, lots of different things like that. There's also professional fees. Accountants, we don't work for free, obviously. Lawyers don't either. There are taxes, VAT, sales tax, all the different additional costs with hiring someone. So if you hire a person and they work for you full time, you need to add at least 20% on top of their salary. So there's lots of different things you do need to consider when looking at your costs and budgeting plan. So number 3 is cash flow and funding strategy. So taking all of those costs, you do want to create a cash flow forecast. So you want to track what you expect your income to be versus what you expect your expenses to be, ideally for the first 12 months. Now, this is going to be changeable. You're not going to be able to do a income and expense plan and cash flow for the first 12 months, and then that is what you're going to stick to for the next 12 months. You will absolutely want that to be reviewed on a regular basis, because you will learn more and things will be different to what you expect them. So just be mindful that's not a tick box exercise and then you can forget about it. You will need to also identify funding gaps, so calculate how much cash is needed before the business becomes profitable. And this is where we really help founders, particularly, is the break-even point, particularly with, say, a Series A or Series B in Europe in particular, is very important now for potential investors. So creating a growth model and a budget to really see what it takes to get to break even, and therefore how much cash you may need to fundraise in the interim. There's lots of different funding options. So there's self-funding, there's grants, there's business loans, there's crowdfunding, there's angel investments. There's lots of different things that you can look at. So make sure you look at all the different options and apply for as much as you can, so that hopefully you're not just reliant on investor share premium funding and dilution of your cap table. And then you need to plan for working capital. So you need to ensure there's enough cash to cover supply payments and production cycles. And what I mean by that is have a really good look at your business model and make sure that the revenue that you expect to come in will come in when you are incurring the costs. Ideally, you don't want to be in a situation where you pay for a huge amount of costs and then 6 months later you get the revenue in relation to those costs. If you're selling products, this is very much a hot topic because you do need to buy the products before you get the revenue. But ideally, you want the working capital be as short as possible, and that cash conversion cycle becomes really important. If you don't plan for a strong working capital, this is a very quick way to run out of cash because you have to pay so much up front before you get revenue. And as you grow, that cost burden potentially becomes unmanageable. Sales and revenue projections. So you really do want to set realistic sales targets. So forecast revenue based on expected conversion rates. Sometimes it's best to be conservative in the early stage, but encourage the team to have a higher target so that you can understand what the business can actually achieve rather than just having this massive hockey stick. It doesn't always work that way. You may also find that when you're trying to do different product or trying to achieve product market fit, you may need to pivot slightly and change your product or service a little bit. So you may find that the sales targets may bumble along a little bit and you'll have to reforecast and change and reforecast. Understanding your customer acquisition costs is going back to the acquisition, the marketing costs. How much does it cost to acquire a paying customer? And therefore, how efficient is your marketing? If you're paying £100 for a customer and they're only giving you £110 revenue, it's obviously not very sustainable. So you do need to constantly review your CAC or your customer acquisition costs to make sure that in order to acquire a customer, a paying customer should be, that you're not spending too much. And then it's thinking about the marketing return on investment. So again, tracking sales channels that generate the best return on investment. And finally is the financial reporting and compliance. So you will need to set up basic accounting systems, so whether that's Xero or QuickBooks or MYOB for tracking income and expenses. You do need to do that before you're going to market. You may just want to set up a third-party bookkeeping firm, just an inexpensive bookkeeping firm. Again, I do actually have a bookkeeping guide for founders. It can be a little tricky finding a bookkeeper that does what they should be doing, but also understanding what they can take on and what you need to keep in-house, I think is really important. This guide also has some red flags. So I'll also leave a link for that below. You can download that for free as well, and that will give you a good understanding of setting up the bookkeepers, essentially. You want to track your key metrics, so revenue, gross profit margin, burn rate, cash runway, and then work out what is your top 5 KPIs or metrics in order for you to achieve your next big goal. If you're at that go-to-market, it's probably product market fit. So you do want to track customer feedback and returning customers. How often do they return? Those kind of things so that you can see if you're getting product market fit or not. Once you've achieved product market fit, then obviously you can revisit the metrics that become the most important. You want to ensure tax and compliance readiness. You do not want to incur large penalties because you haven't been doing as you should. So whether that's VAT, GST, sales tax, payroll tax, legal registrations, business structure, all those kind of things. So make sure you hire reputable lawyers and accountants that can help you set all of those things up. And then monitor profitability milestones. So you should know when the business is going to break even, become profitable. So really consider what are the big things that you want to hit in order to get to that stage. So next steps, first 3 months, focus on demand, validation, pricing, cash flow planning. They're your big things. You want to get product market fit. You want to make sure there's a demand in the market. You want to price yourself well. Your pricing strategy may change and that's fine, but go out with a price that you feel is correct after doing a bit of research, and you may need to tweak it over time. It may even be the same price, but it may be a different way of doing it, instead of a monthly subscription, an annual subscription, all these different things. Cash flow planning is essential because cash is king. You've probably heard a third of startups in the first 1 to 2 years go out of business because they've run out of cash. So you can't ignore it. You can't stick your head in the sand. You have to be on it. The next 6 to 12 months, build out a scalable and sales and distribution model. So if you've got product market fit, it may take you 2 years to get product market fit, but if you get it in the first 3 months, then you want to work out how to grow your sales, and then also how the operations and distributions can support your increased sales. And then once you've been doing that, say for 1 to 2 years, you may look at assessing your funding needs for growth and expansion. And this is where, particularly where you may want to look at someone like me, a fractional CFO, that can help you with those funding needs. Anyway, hopefully that's useful. As I said, this checklist is available for you to download for free. So just follow that link below, and good luck with your new business. Good luck with your go-to-market strategy and rolling out to the world. It's a really exciting time, super stressful time. I'm not going to lie, but it's your business, it's your idea, it's your product, it's your service. It's hard to even just get to this stage, but the more that you plan and think about all these things in your go-to-market strategy, the better outcome hopefully you shall receive. All the best, and I'll see you in the next video. Cheers.